Back with us, Arlen Suderman, as well as Darren Fry. All right, soybean demand, that has really been an opposite story from corn. Are we running out of time for China to come to the market to buy, Darren?
Well, I think that it's a big deal to not have China in our market, but I kind of think that they will end up buying some stuff. Sino grain, obviously, for storage, likes our beans better than Brazil. I don't know if we'll get the crushers to buy. Obviously, Brazil is getting the lion's share of all that business. But I would say that I kind of feel like year after year, when we talk about China's business and how much it means to us, and if we don't get it, we'll have to add 200 or 300 million back onto the balance sheet because we didn't export it. That never ends up being really true. I mean, we find that there's only so many places to buy beans in the world, South America and the United States being the two primary ones. And as a result, you know, when too much comes out of Brazil to China, maybe some other countries need to come to U.S. origin to get their beans if they can't get them from Brazil. So I'm not real bearish on exports like some people, but I do think it'd be even better if China came to the table and we had a trade deal. And I don't see that happening before October or November.
All right, Arlen, even if we turn off dry in August, if China isn't buying, do you think that prevents prices from moving higher?
Yeah, I do think there's an opportunity to do that. And you hit on a key right there. We haven't made this soybean crop yet. The yield is still yet to be determined. And with the lower acreage we have this year and the expectation, we don't know for sure yet because there's some answers we still don't have from EPA, but the expectation of a strong domestic biofuel program, we know domestic demand is going to be strong. So if we would start trimming this yield back, and the crop ratings for soybeans have started to trim back somewhat, then we do have the opportunity yet to tighten things up and to get this market somewhat excited.
Darren, cattle markets, they hit fresh highs. I mean, I feel like a broken record. You know, we have grain prices down, cattle prices up. That just continues to be the case. But are we reaching a point where we could see demand destruction in this cattle market?
Well, it's always possible. You know, when does a consumer finally, you know, had enough and they don't buy the beef like they've been buying it? But we know the supply isn't going to get better. We know that's going to be a tight situation. I'm not seeing really anything in the charts or anything in my quantitative side that says this is about ready to end. But we know it's going to come down to the economy, the consumer, and when they quit buying. I don't know how you predict that. Maybe you see it first in the export market, but we just haven't seen the consumption stop domestically. And with the numbers being tight, I think we could go higher still. And that's what I'm looking for, is higher markets. Still looking for a top, but I don't see it before maybe fourth quarter of this year.
Arlen, do you agree with that? Do you think we're going to see higher highs? And do you think enough cattle producers are hedged at this point?
Oh, we're seeing very active hedging in the industry. They're really managing their risk. They're doing quite well. But I think one of the key questions here is, when do we rebuild that cow herd? And if you look at it from the decision standpoint, if you've got a young heifer and you can sell her for these prices now, or hold her to get your investment back in several years, it's awfully tempting to just go ahead and sell and not rebuild the cow herd yet.
That's correct.
All right. Arlen and Darren, thank you so much for joining us. When we come back, Tractor Tales this week, it's a classic John Deere. Machinery Pete joins us next.